Bitcoin just ripped through $72,000 today, August 20th, 2026, its highest price since early June, and it did it in a single session that produced its strongest daily gain since February. This is not a slow grind. This is a daily move of over 7%, more than $1 billion in short positions forcibly liquidated, and a chart that just crossed its 200-day moving average like it wasn't even there. Here is the entire story in one breath, because you deserve it immediately, not stretched out for 10 minutes. The catalyst wasn't a Bitcoin headline at all. It was the U.S. Treasury doubling its long-term bond buybacks, easing yields, and sending a wave of forced buying through every leveraged short position sitting on the wrong side of the trade, sending Bitcoin from the low 60,000s to above 72,000 in a matter of days. The question every single person watching this video actually wants answered is simple. Is this the bull market resuming, or is this a bear market rally about to trap the next wave of buyers? This channel does not predict where price goes next, in either direction. And what we're going to do right now is walk through exactly what happened, exactly why it happened, and exactly what the bear case looks like at every single step, so you can make your own decision with the full picture instead of a headline. If you're holding Bitcoin right now, or you're deciding whether today's move means you missed your window, this video is built specifically for that decision. A $72,000 headline creates exactly the kind of pressure that makes people abandon a plan they built calmly, and that pressure is precisely what destroys more portfolios than any market crash ever does. Every fact in this video is sourced directly, dated today, or within the past week, and I will tell you exactly where before each one. Before we go further, here's the sourcing on today's move itself. The $72,000 price level, the Treasury buyback catalyst, and the liquidation totals come directly from Tech Times and Trading Key, both published today, August 20th, 2026, cross-verified against Crypto.news reporting on the same session. Every figure in this block is dated to today. Let's be precise about what happened, because the actual mechanism matters more than the round number everyone is talking about. Bitcoin extended its breakout to $72,490 earlier in today's session, crossing above its 200-day simple moving average near $69,010, a level that had been acting as resistance for weeks. By the time of writing, Bitcoin was trading near $71,900 on Binance, still up nearly 4% on the day. Here's the actual catalyst, and it did not come from crypto at all. Treasury Secretary Bessent doubled long-term bond buybacks, from $2 billion to $4 billion, a move that eased long-term yields and pushed capital toward risk assets across the board. That single policy decision, not a new SEC rule, not the White House crypto summit that had been generating headlines all week, was the specific trigger behind the wave of short position liquidations that followed, one source pegging the total near $3 billion and another closer to $1.4 billion, a normal variance between trackers rather than a single confirmed figure. Here's the scale of the forced buying that resulted, according to the most granular figures available. Bitcoin gained roughly 7.1% in its strongest single-day performance since February of this year, with more than $1.4 billion in short positions liquidated across the broader crypto market by that specific measure. Binance alone accounted for more than $311 million of Bitcoin short liquidations within just a few hours. Here's the mechanism in plain terms, because this is the third time this channel has covered this exact pattern this year alone. Every forced liquidation of a short position requires the exchange to buy Bitcoin on the trader's behalf to close it out, and that buying pressure pushes price higher, triggering the next wave of liquidations behind it. That cascade is exactly how a Treasury policy decision about bond buybacks turned into a 7% single-day move in an asset that has nothing directly to do with bond markets. There is also a detail worth flagging directly, because a channel built on verified sourcing does not get to skip it just because it's inconvenient. A widely shared social media post attributed a sizable Bitcoin purchase announcement to President Trump during this same window, and as of this recording, no major outlet with reporters actually present has confirmed that claim. Treat that specific rumor as unverified, full stop, regardless of how many times it gets repeated in comment sections today. Now, the bear case, because we cover it in every single block on this channel without exception. A short squeeze tells you about forced positioning, not organic demand, and a rally built substantially on liquidation cascades can reverse just as violently once the forced buying runs out of shorts left to squeeze. Skeptics are right to point out that a move driven by bond market mechanics and leveraged short covering is a fundamentally different signal than sustained spot buying from long-term holders, and conflating the two overstates what today actually proves. Here's a specific historical parallel worth knowing, because this channel has documented this exact pattern multiple times this year already. Earlier squeezes, including the $56 million short liquidation event just days ago, produced sharp, fast price moves that traders initially read as confirmation of a trend, only for the market to spend the following days digesting the move, rather than continuing it in a straight line. Nothing about today's mechanism is fundamentally different from those prior events, which means the same pattern of sharp move followed by digestion is at least as plausible an outcome here as a continued uninterrupted breakout. Let's talk about your actual situation right now, today, because that's where every good decision has to start. You're watching Bitcoin rip through $72,000 in real time, and somewhere in the back of your mind is a question you haven't fully said out loud yet. Do I actually have a plan for this? Or am I just watching the number move and reacting emotionally like everyone else on this exact page? Here's the problem sitting underneath that question. Most people holding Bitcoin right now have never once written down what they'll actually do the next time price does something dramatic, whether that's today's squeeze, a sudden drop next month, or a euphoric run past its old highs. They're relying on how they feel in the moment, and how you feel in the moment is precisely the thing that's already cost the retail traders liquidated today real documented money. Here's what that gap actually costs if it stays unaddressed. Every single cycle produces multiple moments exactly like today, and without a framework built in advance, each one becomes a fresh, high-stakes improvisation made with adrenaline running and a headline price flashing in front of you. That's not a hypothetical risk. It's the same pattern that's liquidated hundreds of thousands of traders this year alone, on both sides of the market. And there's no reason to assume you're immune simply because today happened to go your way. Here's the offer, and I'm going to be direct with you about it because I think you've earned that after watching this far. The Bitcoin Holder Bible is built to close exactly this gap, a complete framework for holding through euphoric moves like today's without getting swept into decisions you haven't actually thought through. Right now, for the next 24 hours only, it's $27, not the $47 it returns to the moment this flash window closes, and there's no coupon code to remember, no extra step. The price you see is the price you get if you act inside this window. This isn't a generic ebook padded out to look substantial, and it isn't hours of filler content unrelated to what you actually need right now. It's a focused, practical framework built specifically around the exact patterns this channel documents in every video: selling too soon, panic selling, FOMO buying, over-leveraging, designed to be read and applied before your next moment of real market pressure, not bookmarked for someday. Here's why I'm being this direct about it. Today is exactly the kind of day this framework exists for. And waiting until tomorrow to decide means deciding at $47 instead of $27 for a resource that matters more on a day like today than almost any other day this year. The link is below this video right now, and the 24-hour window started the moment this video went live. I want to be clear about exactly what happens after this window closes, so there's no confusion later. This is not a countdown timer that mysteriously resets itself if you check back tomorrow, and it's not a discount that reappears under a different name next week. $27 is available specifically because Bitcoin broke $72,000 today, tied to this exact event, and once 24 hours pass, the price becomes $47 permanently for as long as this specific offer exists at all. Before the next block, here is the sourcing. The October 2025 all-time high, the 50% drawdown context, and the 307-day consolidation figure come from Fortune's August 20th report and MetaMask's live price data page, both published today, cross-referenced against Femex's August 2026 market analysis. Every historical figure cited is attributed to its original source. Here's the context that changes how dramatic today's headline number actually is. Bitcoin reached its all-time high on October 6th, 2025, at $126,198.07. Even at today's $72,490 peak, Bitcoin remains more than 40% below that record high, meaning today's rally is a recovery inside a larger drawdown, not a new record. Here's the specific consolidation pattern this breakout just escaped. Bitcoin had spent 307 days trading between $60,000 and $70,000, the third longest consolidation within any $10,000 price band in the asset's entire history. That extended sideways grind followed peaks above $90,000 and $126,000 in late 2025 and early 2026, meaning the market spent nearly a year digesting that prior move before today's breakout even happened. Here's why analysts are treating the scale of future moves differently than in prior cycles. Industry analysts note that future parabolic moves may require over $1 trillion in fresh capital, specifically because of the asset's larger market size and overall maturity compared to earlier cycles. That's a structural observation, not a prediction, and it matters because it means the kind of explosive multi-month rally that defined earlier Bitcoin cycles requires a fundamentally larger capital inflow to repeat at this size. Here's a detail from earlier this month worth remembering, because it shows how quickly sentiment can flip in both directions. As recently as August 2nd, One widely read financial outlet described Bitcoin as having shed nearly half its value from its October peak, noting that August is historically Bitcoin's worst calendar month, with a median historical loss of 7%. That's the same asset, the same month, essentially the same 3-week window, described as deeply bearish before today's squeeze and as breaking out after it, which tells you something important about how fast the narrative around a single asset can flip without the underlying fundamentals changing at all. Now, the bear case for this block, and it deserves the same weight as everything bullish we just covered. A recovery to $72,000, still more than 40% below the all-time high, inside the third longest sideways consolidation in the asset's history, is consistent with either the early stage of a genuine new bull leg or a relief rally inside a longer, unresolved bear structure, and today's single day of price action cannot tell you which one it actually is. The $1 trillion capital requirement analysts are citing for the next parabolic move is a real structural headwind, not a minor footnote, and it's worth taking seriously rather than dismissing simply because today felt exciting. Here's why that capital requirement deserves extra scrutiny rather than a passing mention. Bitcoin's market capitalization sits above $1.4 trillion at today's price, which means analysts describing a need for over $1 trillion in fresh capital to produce the next genuinely parabolic move are effectively describing an inflow roughly comparable in scale to a substantial share of the asset's entire existing market size. That's a meaningfully higher bar than what drove prior cycles, when Bitcoin's smaller overall size meant far less capital was required to produce the same percentage move. And it's a structural reason skepticism about repeating past cycles deserves real weight. If today's move caught you without a plan, you're not alone, and that's exactly why this video exists. Hit like so this reaches someone else before their next emotional trade. Subscribe, because we're tracking every one of these moves as this cycle continues to unfold. Here's your situation, laid out plainly. Bitcoin is sitting more than 40% below its all-time high, inside the longest sideways grind of its history, and it just broke out on a squeeze driven by bond market mechanics rather than a clean fundamental signal, which means you are right now at exactly the kind of decision point that has separated disciplined holders from liquidated traders in every single cycle this asset has ever gone through. Here's the problem. Most people watching this video are about to walk directly into. They're going to see $72,000, feel either euphoria or regret, depending on what they did yesterday, and make their next move based entirely on that emotional reaction. Exactly the same mistake that's shown up in every documented case this channel has covered this year, from Laszlo Hanyecz in 2010 to the traders liquidated in this morning's squeeze. Here's the implication if that pattern repeats in you. Every emotional decision made at a moment like this, one compounds. Because the market doesn't just test you once, it tests you again at the next squeeze, the next drawdown, the next euphoric breakout, past whatever the old highs turn out to be. And without a framework, every single one of those moments becomes its own separate roll of the dice with real money attached. That's not a one-time risk, it's a recurring tax on anyone holding this asset without a tested mindset behind them. Here's the need payoff, and this is the entire reason I see the diamond matters as a phrase. It's the shift from looking at a day like today and seeing only chaos, a number moving too fast to process, to looking at the exact same day and seeing an asset worth holding through precisely because you've already decided in advance how you'll behave when this happens. The Bitcoin Holder Bible is built to install that shift permanently, not for one trade, not for one squeeze, but for every single one of these moments for as long as you hold this asset. Here's the offer, stated as directly as I can state it. $27 for the next 24 hours only, no coupon code required. The price on the page is the price you pay if you act inside this window, and it reverts to $47 the moment that window closes. This is not a discount you'll see again next week under a different name. It's a flash window tied specifically to today's price action, and the link is directly below this video right now. Here's what specifically changes once you actually have this framework in place, rather than just knowing today's facts. The next time price does something dramatic in either direction, you won't be starting from zero, trying to figure out in real time whether to hold, sell, or add. You'll be checking your own predetermined framework against what's actually happening. That single difference, having a plan to check against instead of inventing one under pressure, is the exact distinction between the holders who compound through entire cycles and the traders whose liquidation gets covered as a statistic in someone else's video. One more sourcing note before the final block. The technical analysis, the overbought RSI readings, and the specific Fibonacci resistance level come from Cryptonomist's August 20th market analysis and TradingKey's same-day report, both published today. Every technical level cited is attributed directly to its original source. Here's the exact level the entire debate over today's move comes down to. Sustainability of this rally depends on overcoming core overhead resistance at the 0.618 Fibonacci retracement level, sitting at $73,227.30. That's not a round number pulled from nowhere. It's a specific, widely watched technical level that traders on both sides of this debate are treating as the line between continuation and rejection. Here's what the broader technical picture looks like beneath that headline resistance level. Every time frame's RSI reading is stretched into overbought territory, and the 15-minute pivot range has compressed so tightly that it's forcing a decision one way or the other in the very near term. Daily average true range sits near $1,489, with the 1-hour average true range near $662, both pointing to a market still moving in wide, fast swings rather than settling into calm, low volatility trading. Here's how one technical analysis published today summarized the tension directly. The bullish case has real fuel, whale accumulation, a regulatory catalyst, and rising market dominance, while the bearish case has equally real ammunition, since extreme RSI readings rarely resolve cleanly without at least a pause first. That's not this channel's opinion. That's a direct characterization from technical analysis published the same day as this video, and it's worth taking both halves of that sentence equally seriously. Now, the bear case for this final block, and it might be the most important one in the entire video. None of this technical setup, the resistance level, the RSI readings, the liquidation cascade, tells you with any certainty where price goes next. And this channel does not make predictions in either direction, regardless of how compelling either the bullish or bearish technical case sounds in the moment. Overbought readings can resolve through a sharp pullback, a prolonged sideways grind that cools the indicators without a price decline, or a continued breakout that simply ignores the technical warning entirely. And anyone telling you with confidence which of those three happens next is selling certainty that does not exist in this or any market. Here's the honest, unglamorous truth sitting underneath this entire third block. A single Fibonacci level, however widely watched, is a description of where traders have clustered their attention, not a law of physics that price is obligated to respect. Treat $73,227 as a level worth watching. For confirmation either way, not as a line that guarantees any specific outcome, once price actually reaches it. $72,000 reached through a Treasury policy decision, a $3 billion short squeeze, and a break above the 200-day moving average. A price history that still sits more than 40% below October's all-time high, emerging from the third longest sideways consolidation in the asset's entire history. And a technical setup balanced precisely on a single Fibonacci level, with real documented ammunition on both the bullish and bearish side of that specific number. Every fact in this video came from a source dated today or within the past week, and every bear case was stated as clearly as the bullish case. What you do with that information, right now in the next 24 hours, is the only part of this entire story that's actually within your control. Here's exactly where you're sitting as this video ends. You've just watched a complete sourced breakdown of the biggest Bitcoin move in months. You understand the mechanism, the history, and the technical tension better than the overwhelming majority of people trading this asset right now, and you're about to close this video and do one of two things with that knowledge. Here's the problem with the more common of those two paths. Most people who watch a video exactly like this one absorb the information, feel informed for about 10 minutes, and then make their next actual decision the same way they've always made it, on emotion, in the moment, with no framework standing between them and whatever the price does next. Knowing the facts and having the mindset to act on them well under pressure are two completely different things. And only one of those two things is what actually determines your outcome the next time this market moves violently in either direction. Here's the implication if you close this video and do nothing else. The next squeeze, the next drawdown, the next euphoric run past today's high, whichever one comes first, will find you exactly as unprepared as you were before you watched this video. Because information alone was never the missing piece for the traders liquidated today, and it won't be the missing piece for you either. You'll be reacting again the same way the people in every case study on this channel reacted, right up until the moment it cost them. Here's the need payoff, and here's the offer exactly as I promised you at the start of this video. The Bitcoin Holder Bible is the complete framework for never being that person again, built specifically around days exactly like today, and for the next 24 hours, it's $27, no coupon needed. The price on the page is the price you pay. In 24 hours, this window closes, and the price returns to $47 permanently, and there's no second flash sale coming back around to catch you if you wait. Here's the honest math on what you're actually deciding right now. $27 is a rounding error next to the hundreds of millions liquidated on Binance alone today, and it is the entire cost of never becoming part of a liquidation statistic yourself. The link is directly below this video, The 24-hour window started the second this video went live, and the decision in front of you right now is smaller than it feels and more consequential than it looks. Here's the specific choice sitting in front of you. One more time, stated plainly. Close this video, wait and pay $47 later for the exact same framework if you remember to come back at all, or click the link below right now while this 24-hour window is still open, secure the Bitcoin Holder Bible at $27, and walk into the next major move this asset makes with an actual framework instead of another headline to react to. Here's the last thing I want you to sit with before you make that decision. You watched an entire video about the exact gap between having information and having the mindset to use it well, and you're now standing at the exact moment that gap either closes or doesn't. Click the link below, get the Bitcoin Holder Bible at $27 while this window is still open, and make sure the next $72,000 headline finds you ready instead of reacting. Let's walk through what we covered one more time before we close. Bitcoin broke above $72,000 today, August 20th, 2026, driven by a Treasury bond buyback decision that triggered well over $1 billion in short liquidations, its strongest single-day gain since February. That move happened inside a price history still more than 40% below October's all-time high, emerging from the third longest sideways consolidation the asset has ever recorded, with sustainability now resting on a single specific resistance level at $73,227. Every source in this video was dated today or within the past week, and every bullish fact was matched with its corresponding bear case, because that's the standard this channel holds itself to, regardless of how exciting a headline number gets. None of it tells you where price goes next, and this channel will not pretend otherwise, today or any other day. If this reframed anything for you, share it with someone before their next emotional trade. Subscribe, because we're tracking every one of these moves as this cycle continues to unfold in both directions. With the same sourcing standard every single time, I'll see you in the next one. This video is for educational and informational purposes only and does not constitute financial advice. Bitcoin and other digital assets are highly volatile, and past outcomes referenced in this video do not predict future performance. Always do your own research and consult a licensed financial advisor before making any investment decisions.